Accounting firms work differently, and they work in different ways. Some are write-up works, and they want to take your work in and do the work for you. I've chosen to structure our business as a resource. I want to train you how to do QuickBooks, let you do the majority of the input, and I act as a resource. That way you use me less and you get more bang for the buck when you do use me. I want to show you how to do it, and then let you do it. Things that I want to do and that you probably can't do are depreciation schedules. You need to maintain book, federal, and A&P, 3 different methods, and it just gets too complicated. There are choices there that I want you involved in at year end, but those are, planning things. I want you to run your business. I want you to buy a truck when you need it. I want you to not buy a truck when you don't need it. Don't buy a truck for a deduction. My typical client is, let's say I go out and I help close the year end. I will do as much work as I can at that client location, and then I bring the books back here. I'm probably finalizing depreciation when I'm back here. I'm probably finding that interest or loan balance was off, but I'm trying to do most of the entries with the client and do as few as possible here in the office before I do the return. After busy season, I want to visit with the client again to bring them the journal entries and make sure that their books and records agree to what I put on the tax return. Okay, and then typically I'll meet with them one other time, usually November, December, and we'll say, how did the year go and what should you plan for taxes? Are you on track? Are you off track? Do you need to put money aside? Hopefully they're paying more taxes this year than last year. That means they made more money. And a lot of people have the wrong attitude about paying taxes. I want to pay more taxes if I made more money. I don't want to pay taxes when I didn't make money. Again, the income is yours and the tax is yours. My job is to try to help you control the tax, keep as much of the money you made in your pocket versus Uncle Sam. My job is to give you options. You have like, let's say in depreciation, you have choices. I can take 179 expense, the ability to write off any current year purchases right away, but that might not be the best thing. If you're in the 15% bracket, your business is growing, you think you're going to be in the 25% bracket next year, that deduction might be worth more next year than this year. So minimizing your taxes this year is not always the optimal decision. You should be taking at least a 2-year look on some of your choices. And my job as an accountant is to tell you what those choices are. As an accountant, what I'm looking for in order to charge less is a clean set of books. I'll get a cold call and they'll ask me, how much do you charge? And I'll say, without seeing your books, it's hard for me to quote that. If I'm out there helping you set up your books, I'm trying to show you the best way to handle a transaction and show you how to record that transaction. If you're consistent in recording your transactions, if you've got all your checks coded, if you've got your bank account reconciled, my job is easy and your fee should be less.